Hello, everybody, and welcome to another episode of Chart Request Live. I am Sam Gatlin, an analyst at All Star Charts, and I'm joined by my very esteemed colleague and co-host and Spaniard. Shout out to Spain making new all-time highs. Mr. Alfonso de Pablos, how is it going, sir?
What's up, Sam? Happy to be here with you.
Dude, I'm very happy to be here. I'm back at my desk in Kansas. It's much more comfortable than the desk I had on the road while I was in Europe, so it's all good here. This is Chart Request Live, Alfonso. This is where the audience provides the tickers and we provide the charts. I see we already have some action in the YouTube chat. So if you are watching this show on Twitter, you should pop on over to YouTube so we can see your comments and see your tickers so we can get to them later in this show. Of course, if we don't get to your ticker, you can email us questions at stockmarketmedia.com. We will put your ticker in the mailbag for the next episode, and we will start the next show with your chart. But today, Alfonso, I wanted to start today's conversation with the State Street S&P Bank ETF. Jean Gauthier, my good man, if you will throw up my chart, KBE, zoomed out to the great financial crisis. Alfonso, as we head into a new year, a midterm election year, historically, not the best years of the four-year presidential cycle.
That's right.
I think this KBE chart is one of the most important charts in the entire world. If this chart is breaking out above those great financial crisis highs, I don't think the world's going to be falling apart. I think everything's going to be just fine, and we'll have another good year of returns. But if this resistance is still resistance and KBE is going to get slammed here, then I think that's a really good early indication of trouble to come. So this, for me, Alfonso, is front and center because historically we don't have bull markets without financials. And this is an amazing way to analyze the financials. It's an equally weighted index. I think there's something like 100 financials in here. I can find out right now, but what do you think about this, Alfonso? Am I off? Is there something else that you're watching? This is 104 banks, by the way, equally weighted.
Look, for me, financial, it's probably one of the most important sectors in America and in the entire world, right? The strength in banks, in the big banks, especially around the world, has been very consistent this year. When you look at European banks making new all-time highs and rip higher week after week, that only speaks about risk appetite entering the market, risk and behavior. When you look at Canadian banks look incredibly good. And now I think some of American banks are playing to catch up. When you look at Goldman Sachs, Morgan Stanley, Citigroup looks great. Even Wells Fargo, right? JP Morgan coiling in a tight range, probably playing catch up, right? So those are...
And Alfonso, let me ask you about Spain. You are in Spain, for all of you that are not aware. And Spain is breaking out to the highest level since the great financial crisis. Breaking above this key level is former resistance, which was support in 2007 and early 2008. So this is a key level right here. Call it 53, 52 and a half. Spain looking fantastic. And I could be mistaken, but I think Spain has more financial exposure than any country in the world. It's like 45% financials.
Yeah, probably. I mean, the thing is that, European countries, are built different than the United States, Asian countries, Latin America. In Europe, you will find a lot of financial exposure, and Spain is one of them. And just look at the ETF, ripping higher since the entire year. You look at individual components like Banco Santander, BBVA, ripping higher in vertical lines. So it makes sense to see the ETF and the entire country breaking out to new highs and behave this well.
100% Alfonso. I see we have some action in the chat. We have Henry asking for the Tesla chart. Hanson wants to see HBM. NP Mel wants to see the Chipotle with the monthly chart, and Wavy wants to see Costco from the short side. Okay, Wavy, I see you. We will get to the YouTube chat after we get through the mailbag. Alfonso, what is first up in today's mailbag? I know we have a packed list today, so let's get through it.
Yeah, let's start with Chris. And I know you like this chart, Sam. You have been showing this chart on Twitter for a couple of weeks. Let's take a look at XOM.
Hey, okay. So yeah, I don't really have much to say about ExxonMobil. You know, this is one of the largest energy stocks in the world. You know, it peaked back in 2008, failed there again in 2014, crashed in COVID. Then you ripped higher. Let's see, 300%. Two new all-time highs, peaked in 2024, and you've just been dead sideways for years here, Alfonso, pushing 3 years now of dead sideways in ExxonMobil, and that's what it is.
Show me the PPO, the monthly PPO or the weekly PPO. I know you have been pounding the table on the PPO crossover and energy in general. So
totally, yeah. So this is the monthly PPO. For those of you that are not familiar, it's essentially the MACD. I think most people know the MACD, but this is like the logged version of the MACD. So you can analyze it over multiple time frames, unlike the MACD. So I prefer the PPO to the MACD, although they are very, very similar. Nonetheless, you can see that when you use it on a monthly chart, it gives you very few false signals. So you got a buy signal here in February 2021, right as it was resolving this tactical base. Then it didn't top until May of 2023, which was also a pretty good sell signal. You got out way before this just sideways mess. So I think a fresh monthly PPO buy signal in the ExxonMobil would be the first step in resolving this sideways primary trend and resuming that long-term primary uptrend in the ExxonMobil. And again, this is one of the largest energy stocks in the world. And if that's breaking out, you know, there's going to be a lot of stuff happening under the surface in energy. You're going to see oil and gas services stocks doubling in a month. You know, like that's what's going to happen if ExxonMobil breaks out of this base. So
we're starting to see, you know, a couple of weeks ago, we started to see some strength beneath the surface, especially with the refiners, some oil services as well, catching up a little bit, gaining momentum. But for me, for energy stocks, it all comes to XLE. If XLE breaks above, it's around what, 50?
Yeah. And you have to remember, Alfonso, ExxonMobil is like 95% of the XLE. I'm exaggerating, obviously, but you know, the XLE is an ExxonMobil and Chevron fund. You have Exxon and Chevron making up about 40% of the total XLE. So,
you know, and look, those are multi-year consolidations. Fuel its, you know, building beneath the surface, and any breakout. I mean, I'm waiting for that breakout. I have been playing with some tactical calls options in recent weeks in recent weeks. But the ultimate indication for me, it will be, you know, a breakout above 50 in XLE for energy stocks in general. So.
Totally. And this isn't really, you know, sure, you can be tactical with it and play some short dated call options or something like that. But for me, this is not something I'm interested in jumping. You know, this is something I want to see confirmation of a breakout.
Yep.
And new all-time highs. I want to be a buyer of strength, because I don't think this is going to just hit one target or two targets or three targets. I think energy is going to absolutely scream higher if and when it decisively resolves this base. So I'm in no rush, Alfonso. I think this is probably the next secular trend in the markets. It's going to be like precious metals and the base and industrial metals are
Right.
today.
I love it. I love it. And from an intermarket perspective as well, gold, already mooned, silver, it's breaking out. Now I think copper is next, and then at the end of the cycle, it comes energy and catch up, right?
Totally, Alfonso. And I saw on the All Star Charts blog, we published a small cap energy post. I'm looking for the link right now. Here it is. I will drop it in the YouTube chat so all of you can see it. But man, we outlined some amazing trade ideas there. I think there's close to double-digit trade ideas. So no shortage of opportunities in small cap energy right now. So I encourage all of you to go check that out. I just dropped it in the YouTube chat. So head on over to the All Star Charts blog and see what we put together there. But Alfonso, what do we have next?
Yeah, let's continue. Let's take a look at 1 to 2 month outlook for DXPE. That's come from Jonathan.
This is, let's see.
That's a nice base.
Not familiar with this one. So this is a $1.7 billion wholesale distribution stock. Okay. Interesting. From Houston, Texas. Shout out to H-Town. So they asked about a 1 to 3 month time horizon. Is that correct?
Yeah, 1 to 2. But for me,
I don't like this chart for that, Alfonso. Like, I think over the next probably less than 3 months, maybe 1 month, I think this one gets back to like 130. Mm-hmm. So that's my tactical outlook. I think you could lean against this former support. Call it
like 110.
Call it 110, I think.
Yep. Mm-hmm. Yep.
So a breakout above 110, which you're flirting with today, would set this thing off towards 130. But for me, I'm more interested in trading this long-term pattern, this breakout above the 2014 highs in the DXPE. So
zoom out. Yep.
Yeah, if you get above those 2014 highs coming in at like 116, I think the bias is higher towards 180.
I couldn't agree more. I mean, risk is very well defined. I like 130, 116, 115 to define risk. I like this pattern in this way. That's monster base that the XPE has been carving out for the past, 10 years. And I'm more interested to buy this base breakout, this breakout of this base. So that's
totally, Alfonso. And I love this monthly candlestick action. So let's do some analysis here, Alfonso. So in August, you got that monthly breakout to new all-time highs. Then in September, you had a doji. And then in October, you also had a doji. So those are like indecision candlesticks. And then in November, the sellers stepped in. So the indecision was resolved. The sellers were taking control of it. And now in December, the buyers are coming back in. So normally with this kind of candlestick pattern, you'll see downside follow through after this gross November candlestick. But that's not the case. The buyers are quickly stepping back in. So to me, that is very bullish and it hints that a potential breakout above these 2014 highs. The buyers are doing a fantastic job of absorbing that overhead supply. So I like this setup a lot, Alfonso. This is not a chart I've looked at recently.
No, that's a great candlestick analysis here. And it looks more like, buyers are absorbing overhead supply for the past 5-6 months. And I think you can buy that base breakout when it comes.
Totally. Who brought this one, Alfonso? This is an early leader for chart of the day.
Jonathan.
Shout out to Jonathan. Thank you. What's next, Alfonso?
Like speaking about, we started with Spain financials, banks. Let's take a look at SAN,
Okay.
Banco
So is this the
Santander.
largest bank?
Let me check.
From Madrid. Shout out Madrid.
But it's, yep, you have to come.
Totally, Alfonso. So this is a $168 billion Spanish bank, and here it is trading at the highest level since 2011. Earlier, I showed you that the Spanish ETF is trading at the highest level since 2008. So let's look at this relative to Spain, first of all. Yeah, that's what I'm talking about. All right, big base breakout in relative terms. So this is certainly a leader in not only Spain, but financials around the world. So
Mhm.
yeah, huge shout out to the Banco Santander. Let's see if we can get a good Fibonacci retracement level to trade against. If not, I have some other ideas of how we could define our risk. And Alfonso, it would be helpful if we had a time frame for this. Did they mention that?
Yeah, a 3 month time frame. Yep.
3 month time frame. So yeah. All right. I don't know if 3 months is enough. I would say more to like 3 to 6 month time horizon.
Mhm.
But how I would be looking at this is defining my risk at this 2014 peak. So that is about 10 and a quarter. So you have a buck 25 of risk right now, give or take a few cents. And I think the reward is this peak from, when was that, 2010. So I think this looks like it wants to go to 17. So that's about 50% upside. So like a 5-to-1 risk reward. Not bad, not bad at all. And you can see this is a really key level of interest here, this $17. Not only was it the peak in 2009, but this was support back in 2007, 2008. So it's a key polarity level. And I think the price is going to be dragged there like a magnet.
Yep, and if you overlaid Banco Santander with BBVA, yeah,
BBVA.
yeah. Notice how BBVA it's already above those
Totally.
2010 highs. So for me, it's kind of playing catch up here, and the upside potential, as you mentioned, Sam, it's huge, and this band continues to go higher. They may be a little bit extended in the short term, but look, every time that I say that, they keep makes new highs. So
Yeah, right. Yeah. It's the same situation for precious metals, Alfonso. Like these
exactly.
momentum freaks come out here and say, like, silver's the most overbought it's ever been. Gold's the most overbought it's ever been. Gold's gone up for 12 straight months. It doesn't give a shit about your momentum indicator. It's going up. Like, price is the only thing that matters. So, like, yes, this isn't a sweet uptrend, but that doesn't mean it needs to magically turn into a downtrend or anything like that. Like,
Look,
I like this uptrend a lot, and this is like a
it's
trend follower's dream, Alfonso, right?
look, yeah, exactly. And yeah, it's a good way to compare European banks with gold, silver, and precious metals in general, because each consolidation within that uptrend has come in a corrective way through time, not through price, right? So every corrective wave, it's been a tight range, and then breakout comes after that. So I like these uptrends.
Totally. I love it, Alfonso. If anybody has more Spanish financials they want us to look at, drop them in the chat. I'm into it. I'm into it a lot. Alfonso, what do we have next?
Yo, let's take a look at some of our YouTube comments here. Let's start with Wavy. Let's start with Short Costco.
Yeah.
Show me that chart. Ooh,
So let's remove that and
bro,
look at
terrible
this.
day. Terrible day today. I know what Wave is saying here.
Yeah, so the Costco reported earnings last week. They had a double beat, and the stock was flat. It closed at the same price that it opened. And
Okay.
today you're getting decisive downside follow through, and not only violating that earnings day low, but you are
Mhm.
decisively resolving a prolonged distribution pattern that has been taking shape since about this time last year,
Yep.
really like last fall. But man, I don't think the risk could be more well defined here. So if you want to be short Costco, I think you can only be short if it's below, let's call it 867, let's see, 867. 867 exactly is the line in the sand. So at 857, you have 10 points of risk essentially
Mhm.
in the
Yep.
Costco right now if you want to be short. And I think the first target, if you want to be short, is this pivot low from August of 2024. So that comes in right around 794, 790 ish. So that
70.
is pretty
Right.
good risk reward if you want to be short Costco. I mean, it's not a huge reward, but
You can
you
you
know.
can you can also, I mean, if you want to find a potential downside target, I think you can also drop the VWAP from the 2022 lows, and right now it's right at 730. So I think you have a nice risk reward there. I mean, the stock has to go down like 16%. And what I like about this trade, this potential trade, is this setup, is that you have your line in the sand, Sam. So below what? 860, 867? That's our
867. Yeah.
line. That's our line in the sand. Below that area, below that level, the risk, in my opinion, is to the downside, and the passive level resistance is lower. So I like that idea. So
Totally, yeah. And
this chart.
yeah, Wavy, we talk a lot about trading from the long side on this show, but let's not forget this is a market of stocks that we're analyzing here. And a lot of stocks are not in primary uptrends. A lot of stocks look like Costco, and there are fantastic short opportunities in this market. Sean McLaughlin, the chief options strategist at All Star Charts, the best trade he's put on all year long is not in some hot AI stock. It's in a shitty consumer staple stock that he shorted. So I think it can be very rewarding to take the bearish side of the market. And it's also a good way to hedge a long book, like we are in a bull market. So like you probably
Mhm.
should be leaning long, but you shouldn't just have that long exposure. I think it's prudent to also have some shorts. And I think Costco is a great opportunity for that. So shout out to Wavy for bringing this along and um, having this conversation with us. I appreciate it.
I love that explanation, and I love the chart. I like the pattern. I like the setup there. So let's take a look now at CMG Chipotle.
Chipotle.
Hmm.
Let's see. This is just pretty messy.
It is messy. However, just drop the a fib retracement from the 2018 lows to the 2024 highs, and you will see where the price has been bouncing off.
Okay.
Right
Yeah.
there.
Yeah.
It's messy, right? It's messy. It's a little bit hard to define risk, but I think that will make sense.
Yeah. I think you could use like this pivot low from October 2023, which you're
Hmm.
kind of finding resistance there. You're trying to break out. I don't know. It's not a good start to the week so far, so I wouldn't be
For me,
surprised.
we are like in no man's land in Chipotle, right? We
Yeah.
just completed a tactical top here. This looks more like a downtrend right now, and I'm just dropping the VWAP from the all-time highs and from the 2018 highs. And for me, that will be the ultimate confirmation about the next resolution in this trend. We're far from those VWAPs. and I think we can see some, more consolidation in the future. So that's where my head is at with Chipotle.
Totally. And I'd like to look at like some Bollinger Bandwidth on here. So
Okay.
like I think this is important to remember. Like Chipotle has just gotten the shit kicked out of it. Like Chipotle is down, let's count, 50% since over the past year and a half, let's call it. So,
Yep.
it's gotten destroyed, and the Bollinger Bandwidth, the volatility is at the highest level in years. So I think betting on a big mean reversion move higher towards this VWAP from the all-time high, this former support, this 47, I think is a little bit premature. I think the more likely scenario here is that Chipotle just churns sideways here and carves out some type of accumulation pattern. And then maybe this time next year, you're looking at $47 on the Chipotle, but
we're in the
short
same
term,
page.
I don't like it very much.
No, I think we're in the same page. I think more sideways and more consolidation here. It's coming next for Chipotle, and that will come with these two vehicles I just mentioned. To keep converging and trapping price into a tight range, and then once all this damage has been repaired, we will see some type of resolution, either to the upside or to the downside. So I think that's where my head is at with CMG. I like what you said.
Shout out to the NP Mel for bringing that one along. Alfonso, what else should we take a look at? I think we have time for two more charts.
Yeah, let's take a look. Hansen wants to take a look at HBM. But we also, I want to finish with Tesla, because Tesla, it's probably the chart of the day, in my opinion.
Yeah, that chart looks crazy good.
Between HBM, TIGO, or some people is asking for Next and EXT. So up to you.
Yeah, definitely not the Next. Let's go with the HBM.
Yep.
Perfect. I really like the base and industrial metals trade. Give me just 1 second here, and I'll drop a link in the YouTube chat, and you can check out the commodities weekly post that Jason and I put out on Friday, covering the base metals trade. You have some tremendous participation in the base metals. It's not just a copper story, which is primarily what Hudbay is interested in. There is the link for all of you in the chat. Go ahead and check that out on the blog. It is free to review, so don't hesitate to look at that. But HBM is a $7.5 billion mining stock. They have some zinc exposure, which I mentioned in that commodities weekly post, but they are primarily focused on copper. So if you look at HBM relative to copper futures, you can see that HBM has been steadily outperforming really since the summer of 2022, higher highs, higher lows. So yeah, I like that a lot. I think we could also look at it relative to its peers in the copper miners industry, and you'll also see a very similar story. It's been steadily grinding higher for years.
Even relative to the S&P, just throw that ratio chart. It's carving out and completing a classic reversal pattern. So yeah, I mean, look, this name looks incredibly good. And from a risk management perspective, just zoom out a little bit, just drop some fee retracement. We're right there at the 61.8 retracement around 18.5. So that's the big level.
Totally, Alfonso. Yeah. I mean, we've been talking a lot about like great financial crisis peaks or 2011 peaks. In this case, it's a 2010 peak. But that's coming into play a lot. Take notice, guys. In other words, a lot of charts are breaking out of multi-decade accumulation patterns. Like this is a big deal. How I learned it in technical analysis kindergarten is the bigger the base, the higher in space. It's as simple as that, Alfonso. HBM is trying to climb out of a massive base and break out to the highest level since the great financial crisis. So if HBM is above 19, I think this one is going to 28 and a half, call it 28 if you want to be a little conservative, but I think there's tremendous upside there. And I don't think it's going to stop at 28. I think it will continue to climb higher. I can give you a Fibonacci extension level if you have a long enough time horizon to trade this towards that 45 level, because I think HBM is going to 45, Alfonso. I'll be honest with you. I like this name a lot. This is the leader in the copper miners. I love how copper has shaped up here. Just closed November at the highest price in history. Now it's climbing back towards this peak from the Trump dump back on July 30th. I remember, Alfonso, I was at a beautiful national park in just outside of Seattle, Washington. And I was just really enjoying myself with nature. There were like chipmunks everywhere. They were so cute, just munching on their nuts. I was really into it. It was a surreal, scenic nature moment for me. And then I pull out my phone, and copper is down like 20% in a single session. I was like, holy shit, is this real? Like, do I have bad service out here? Is there a glitch? And sure enough, copper was down 20% in a single session. I think that was the worst day ever for the copper futures. So, man, I'll never forget that day. That was insane. Shout out to Trump. That was quite the move. All right, Alfonso, we said we'd finish with the Tesla.
Let's finish with the Tesla. And I just want you to zoom out first. Let's start with a monthly chart, because we can do a multi-time frame pattern analysis here. You will, markets are fractals, and just zoom out. That's a monster base. That's a, multi-year base. Now we're breaking out to new all-time highs. And what I want you to do, Sam, is start to zoom in a little bit and focus more on, different bases within this context, right? So this is the bigger base. Now, then you have like a 1 year base, right? On a weekly time frame, right there. Yep, exactly. And then when you zoom in again, you will see that little coil that it looks in the weekly time frame. This is a nice base in the daily. So, so
in other words, it's base on base on base.
Exactly. Yeah. Multiple time frames. So, bases resulting higher on the daily, on the weekly, and the monthly in Tesla. Look, I think you have to, hold your nose and buy some Tesla, as long as those breakers hold. So
you're getting a long upper shadow here in the middle of the day. So you don't want to see this close with a long upper shadow. You could get a retest of that gap over the short term. But as you said, Alfonso, this is shaping up really nicely over multiple time frames.
And the stock has been consolidating in that monster base for years now. So, all the energy that has built there, I think it's ready to explode higher, right? So
totally. And I like to look at Tesla with the Russell 2000. Like if you overlay the two, they're very similar.
They're very similar.
Tesla is not. It's not a car company. It's just like Elon Musk's startup is what it is. Like, so it just trades on a lot of animal spirits, like the small caps do. This is about as speculative as it gets in the large cap space, mega cap space, I should say. And that fundamental thesis makes sense when you look at Tesla overlaid with the Russell 2000, and it looks like the Russell 2000 is pretty decisively breaking out to new all-time highs. So I think that's very bullish for Tesla.
Yep. No, I have to agree with you. Probably one of my favorite charts right now. If this breakout holds, yeah, I mean, I think Tesla's gonna go.
Totally. So is this the chart of the day?
For me, it's the chart of the day. No, for
I'm
me,
gonna go
it's
with
the
the HBM. I'm the commodities guy, so I have no shame going with the
That's fair. That's fair. I love the two charts, so can argue against that.
Totally. This was a great show, Alfonso. Shout out to all of the viewers for making this so awesome. We couldn't do it without your tickers. I see there were a few more in the chat that we did not have time to get to. So if we did not get to your ticker today, do not hesitate to email us questions at stockmarketmedia.com, and we will put it in the mailbag for the next episode of Chart Request Live, which we will be doing again at 1 p.m. Eastern Time next Monday. That is the 22nd of December. Next week is Christmas week, Alfonso.
Yep.
Time flies.
I'm very excited.
It's going to be a good time. Yes. All right, everybody. Thank you for being here. Shout out to the Joe. We've got that capital in the chat. JVM, Henry, Hanson, NP, Wavy McFly. Thank you all for being here very much, and we hope to see you again next week. Until then, try to stay warm. You know, it's freezing where I am. We got some snow over the weekend. I know there's a lot more snow on the East Coast. I don't think it's going to be snowing in Spain, so I think you're doing okay, Alfonso.
At least not in Madrid, but it's getting cold here. So yeah, stay warm over there.
I will do my best. All right, everybody. We'll catch you on the flip side. Adios.
Thank you, guys.